markets, of course, we all know they're in turmoil right now. Roughly, oil is up. But why is it up? How is it up? Like, what does this mean? Prices have spiked from $73 to about $100 per barrel. Currently, we're sitting at $98 per barrel, so that's about 37% move. Just by the geopolitical risk. One day he could be bombing Iran. The next day he could be going to peace with Russia, right? So it's like, oh, this is a very, very crazy place for the Fed to be right now. Block has basically fired 50% of their workforce. And the CEO came out and said, hey, we're firing 50% of our workforce because of AI. It's going to be mass layoffs happening soon. And that's mainly due to AI, essentially. And fear is great for traders, right? Because it creates volatility. If you know how to trade volatility, it creates buying opportunities because that's when most millionaires are made. Don't go very aggressive right now. Like, it's very choppy, in my opinion. It's not the time to be going aggressive. It's a time to be holding on to cash or even accumulating cash.
Recording in progress.
La 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 la. Da 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 da. What's up, sluts? What's going on? Howdy doody, my friends. Let's get this party started. What up, what up, what up, everybody in the house, motherfuckers? It's Saturday! What's going on? Yo, Bruno, what is going on in the hood? Anybody making any money? That's the big thing. Who is making some money? Bruno, Simon. Good, Mehul, your audio is off. Oh, there it is.
How's it going?
Hey.
Happy Saturday. How's it going?
Hey, man, doing the Lord's work as always. Doing the Lord's work as always.
What's up,
Brony,
Brony?
you still keep your hot streak going or what?
I think he's still on a heater.
He's still on a heater. Good. Let's get a couple minutes. Let everybody get in. All right. All right. All right. I think we're getting everybody in slowly but surely. Hey, what you doing today, man?
I'm just working. That's it. Stay every day. Every day we work. Dissecting the markets, and then we just keep pushing.
Yeah. Same.
St. Patrick's Day too, right? I forgot about that.
Yeah. I would do anything. Is it St. Patty's Day today?
I think so. I think it's today.
I think it's on the 17th usually, no?
17th. Yeah. My bad. Hey, Chris, how's it going?
All right. Okay. All right, go for it, baby. Hey, Anu, how you doing, darling?
Let's give it a go.
Guys, you guys are in for a treat today.
All right, cool. I'm gonna share my screen. Actually, I need request access.
Allow. Go for it.
Cool. All right, what's up, everyone? So we're gonna be dissecting a few things in the market. I have a quick presentation, and then we'll dive into the charts as well. So markets, of course, we all know they're in turmoil right now. There's a lot of things going on with the indexes themselves, as well as like what's happening in the geopolitical situation with the war, the energy shock, like the macroeconomic situation, when it comes to inflation, when it comes to jobs, just kind of breaking down everything. That's what we'll cover today in the next few minutes here. So um, this is where we currently stand. So on all the indexes, ES is basically at 66.36. It is primarily it's being headed by the energy spike and a lot of corporate margins that are being hit. There's a lot of earnings that are coming out very shortly as well, and they have been coming out for the last week. So that's been affecting the ES S&P 500. When it comes to the NASDAQ as well, this is the one that's hit the most. It is the one that's hit the most. It's the most sensitive one. The high oil basically is acting as a tax, which is basically killing all tech valuations. So all tech valuations are getting hit, especially when oil is on a like surge right now. So I think we're down roughly 7% from January highs, and we're probably going to go lower, which is my prediction. I'll show you why I think so. But on the other hand, we have the Dow Jones, which is essentially the relative outperformer out of the three of the indexes. So it is the one that is not hasn't really moved much for the entire year. It's the one that's heavy industrials and energy stocks, so it's absorbing the shock way better than the S&P as well as the Nasdaq. So that's kind of where we're at, and we'll break it down into on the charts as well. But like, let's talk about the oil situation, right? So a lot of you guys might have heard like the Strait of Hormuz, or like, or a little bit of what's going on with Iran and the war and kind of how that's affecting the markets. But we all know that roughly oil is up. But why is it up? How is it up? Like, what does this mean? We'll kind of break that down. So as of right now, basically the war 2 weeks ago, or maybe a week ago, I think Trump had basically put out an announcement saying that it's over, or they've kind of completed what they wanted to do. Of course, that caused a spike in oil, and then an immediate dump, like 30% drop in oil prices since then. However, we've slowly crept back up. Why? Because that tweet or through social, whatever he said, was kind of false, right? We still see bombs going off. We still see cruise ships, oil tankers being hit off the coast of Hormuz. So I don't believe, in my humble opinion, as well as from what I've heard from people that I have in those areas in Asia, that it's over. I think we're about to get ready for like a next round of things, and that's going to create another surge in crude oil prices, which will basically add to inflation and whatnot. Will basically drop the entire market. So prices have spiked from $73 to about $100 per barrel. Currently, we're sitting at $98 per barrel, so that's about 37% move. Just by the geopolitical risk, not by demand, not by any other fundamentals. It's just by the supply risk that is being created by this Strait of Hormuz. The supply chain bottleneck. Why is it actually important? It's because all the global shipping routes, literally all the global shipping routes, in particular the Strait of Hormuz, is under severe stress. Right, rerouting all of this stuff will take a lot of time, will take a lot of money, a lot of logistical costs to try figure out how to get oil back on track and how to get the supply back to where it needs to get to. Um, and then in addition to that, there's also a Fed blind spot, right? So what I mean by that is basically the inflationary spike that we saw from the recent CPI reading was that it wasn't accounting for it wasn't in accountants for what they had predicted in 2026. So they didn't expect this to happen. No one, like basically Trump came out of nowhere and started doing all of this, I guess you could call it damage, you could call it peacekeeping, whatever you want to call it, right? And that was no one could have predicted that. So Fed was in a blind spot and they didn't really um, position themselves for this. So as you can see here, this quick chart of like how oil has trajected over the last few months, October all the way till March. So like we were sitting like roughly flat until this year. So November, December, January were flat in the 70s, and then we just like spiked. We spiked all the way to like 120. I was long from about 70s to about like 110s. I didn't catch the short, but we caught some of the long. Now we're back up in the hundreds, and I instead of getting back into the oil side of things, I would rather us get into the indexes, and I'll break down which indexes to get into, why I'm getting into them, some of the stocks as well that are looking good to be bought. So that's on oil. Now let's dive into CPI, NFP, and like the Fed's dilemma that's going on. For CPI, I already touched on that a little bit, right? So the Fed didn't predict the way inflation was going to increase because they didn't know about the war and everything that's going to go on. So we came in at 2.4%. That was seemingly benign, right? However, the market's already looking over this, like it's not using this as a true number, right? Not using this as a true number because they know it's due to oil shock. They know it's due to energy issues. They know it's due to food prices that are just like being overinflated, right? So the Fed's path right now is very uncertain. If I was in the Fed's chair, um, I probably would not know what to do because I would not know what, in my opinion, Trump is going to do, right? Like it's very hard to predict what this guy's going to do. One day he could be bombing Iran, the next day he could be going to peace with Russia, right? So it's like it's a very, very crazy place for the Fed to be right now. And he also doesn't like the current Fed chair. So we already know that. He doesn't like Jerome Powell. He wants to replace him with someone else. Um, so there's a lot of stuff that's up in the air. All our job right now is navigate this uncertainty. When it comes to the labor markets as well, the labor markets are very tight. There's two different things that are affecting the labor markets. The first one being AI. So most of you guys have probably seen a lot of companies, um, one being like Square or Block, right? So Block has basically fired 50% of their workforce. And the CEO came out and said, hey, we're firing 50% of our workforce because of AI. Everyone knew AI was going to come in and take over jobs. And he says, instead of us like slowly getting rid of jobs, like week after week after week and decreasing morale in the company, I'm just going to fire 50% of you guys. And if you are part of a select few that are on a consultant basis, you will get some repercussions, or you'll get some like consulting gigs that you can help us with. So he is doing that. He's led the wave of firing or laying offs in the tech space, and that, in my opinion, is going to basically like lead its way to all other tech companies. It's going to be mass layoffs happening soon, and that's mainly due to AI, essentially. The next one is, like I said, there's two. The next one is basically being the geopolitical situation. So we already covered that. So if you were to understand the key risk is basically if the March CPI prints significantly higher than 2.4%, which oil suggests strongly it's going to do so, the Fed is basically going to face a stagflationary bind, basically, which means rising prices alongside slower hiring, right? So that's what equity markets fear the most. And in my opinion, if this happens, the market is going to drop. So put two and two together, it's going to equal a basically dump in the market, in my opinion. I think we're going to fall lower from where we're currently at. This is kind of a quick chart showing you that the NASDAQ is down 6%, ES is down 3%, and then the Dow Jones is down 1% roughly from January highs, right? January highs, January highs, January highs. Now, so the macro storm in a glance, right? So you guys can quickly understand this if you haven't got it just yet. So US and Iran, we're at conflict. There's Hormuz closure that's going on. There's military escalation that's going on. Warships are being sent over to Iran. That's going to create an energy shock that we already see it happening to Brent oil, Brent crude oil. We're already seeing it to natural gas. Those are both increasing in price. And from there, essentially, that's going to create an inflation spike. CPI is sitting at 2.4% now. It's going to basically expected to increase, right? So you might feel it at the gas pump. You might feel it when you buy groceries. You might start feeling it in your day-to-day purchases. And if you do feel it at that point in time, just know that the market is going to probably take a dump. Labor uncertainty is tight NFP, hiring is paused. So all of this is creating a lot of fear in the markets. And fear is great for traders, right? Because it creates volatility. If you know how to trade volatility, it creates buying opportunities because that's when most millionaires are made, when you can buy and you are cash heavy and you know when to buy, what to buy, right? Not, you don't have to time the button, but you know, you can figure out like when to start positioning yourself to start adding long-term shares in certain companies. So this is a good picture to kind of have to snip it. Like if you want to do like keep track of, this is a good thing to just kind of like be aware of. Another thing to be aware of is the midterm elections, right? So in the midterm elections, this is the historical pattern that I've seen. So as of right now, in 2026, H1 of 2026 is chop and pullback. So the markets historically cause chop and they pull back for the first half until midterm, right? That's currently where we're at. And we're also amplified by geopolitical stress. So when I go into the charts, you'll see exactly this happening, right? You'll see how the markets are very choppy and how we're pulling back from the highs, which I've already demonstrated by this, right? Where did it go? This is already pulled back from the highs. And then you'll see the chop. Post-election, the 12 months post-election is typically the strongest in the entire 4-year presidential election year. So like that's when they tend to reduce policy uncertainty, re-risking, re-establishing different things. That's typically what happens post-election. But during election, the event itself, it's a lot of uncertainty, right? A lot of situational non-knowingness, like unknowingness, essentially. I don't know how else you could say it. It's basically with the war, with election day coming up, we won't really understand what's going to happen. And typically, what we have seen in the previous years is that we've seen a lot more chop. But after all of this has happened, is when things do get clearer up. So, what does this mean? Basically, it means stay cash heavy, in my opinion, until this is all over, and then start, or basically not just only deploy then, but start deploying slowly and gradually. Don't go very aggressive right now. Like it's very choppy, in my opinion. It's not a time to be going aggressive. It's a time to be holding onto cash or even accumulating cash. And one way of doing that without putting your own money at risk is to do it with prop firms, right? So prop firms, you can buy challenges, you can buy these prop firm accounts, you can get paid out from these prop firms, and you don't have to risk your own capital, right? It's a lot more worse when you risk 20 grand of your own account versus like 20 grand of a prop firm account, right? So you might as well purchase prop firm accounts, stack payouts, accumulate a cash flow, and then start deploying that cash flow into long-term assets and long-term purchases. Um, that's what I would honestly recommend. It's the most strategic way of doing it. So like the framework right now, right? So how do we navigate the current environment? So we got to lean into energy and industrials. So we already have seen that the YM is has relative strength. It's outperforming all other indices. So the energy and industrial names with direct commodity exposure, those are the ones that are going to hedge against the oil shock. We want to be positioning ourselves into some of those ones. Ideally, we want to be rotating out of the NQ names, so the heavy tech sectors, until the whole Hormuz situation clarifies itself. So if you are heavy tech right now, you want to be probably either going cash or rotating into energy and industrials, in my honest opinion. So managing your tech exposure tactically, a lot of people are tech heavy, which is fine. I don't have an issue with that. I'm tech heavy myself, right? Um, but we're down 47%. I think we're going to go lower, especially if this whole situation continues. And I think we will continue this way until elections. So elevated energy costs, we're going to compress tech margins with that. So a lot of these AI companies, you've probably seen, right? AI data centers are requiring a lot of energy. A lot of energy means a lot more like expensive fuels that are needed for it. So natural gas or oil that's needed for it, which means lower margins, right? So lower margins means the earnings report at the end of the quarter is going to be probably lower than expected. And that's going to take a dump in pricing for that company. So the tactical hedge on NQ positions are basically warranted, um, like based off the CPI data and the Fed signals. Um, and then position yourself for midterm setup. So like the current chop, it's been there. It's like the normal thing that's been happening. You want to be zooming out. You want to be looking on the larger time frames, view the hourly time frames, the daily time frames, look at the pullback, look for zones of accumulation. Post midterm is when you want to be like going aggressive, right? That's when you want to start. You might have like a few positions added to your portfolio, but then you start like fully deploying capital like post elections, um, in my opinion. So the key risks and the watch list essentially right now is that the risks to monitor, to be aware of in whenever you guys watch news, whenever you guys read news, whenever you guys just are in the markets, these are some things to watch, right? Hormuz remains closed beyond Q2. That's going to basically create sustained oil prices above $100. If the March and CPI prints force the Fed into like an emergency hike cycle, so we want to be aware of like what the hell happens when March and April CPI prints like read. And then if NQ breaks January low, so it's technically breaking and accelerating very, very quickly. NFP, if it deteriorates rapidly, soft landing narrative, like we want to be aware of some of these things, right? For upside risk is basically if we see this stuff, right? If we see a resolution to the Strait of Hormuz, something reopening, immediate crude reversal, that could happen overnight. That could literally happen overnight. And that's why I'm saying these are times when there's a lot of uncertainty and you don't want to just fully send your portfolio in one direction or the other because homie could wake up one day and just be like, we're done. And then everything will just like go back to normal. Um, which is a very scary place to be when one person can just like say that and everything can just like change overnight. But it's just you have to be nimble in these situations, right? So CPI surprise to the downside. For some reason, if we do get a CPI print lower than expected, the Fed has the flexibility to start doing whatever they need to do in terms of cutting rates or whatnot that they had initially planned to do. Earnings resilience, if we see a lot of corporate margins increasing despite the high energy costs, I don't know how that's going to happen. But again, all of it, in my opinion, is to do with energy and the cost of energy in the next few quarters, right? Midterm elections, so the post-election rally, that's typically what we've seen before. So that's that on that side of things. So now we can dive into the charts. Now that you guys all understand this stuff, hopefully this has given you some insight into what to look into or what to be aware of. Just to gauge from everyone in the chat there, just I haven't looked at the chat yet. Let's see. Hopefully this makes sense. If you have any questions, let me know. Like please type in the chat there. And then I'll dive into the charts as well. Okay, Brunoni's got a question there. When zooming out on the cues, would you say that a bigger pullback would actually be healthier for the market? In a sense, we haven't seen a deep pullback since January, April timeframe. Yes, so we can dive into the chart and kind of break that down now. So let me share the other screen. So yeah, so this is the NQ. So if we're looking at the Qs, it's the same thing, right? Essentially, I typically draw two lines. Let me get rid of the other ones for now. I typically draw two lines that are very key to my understanding of the entire market. It's the 200 WMA and the 50 WMA, right? If we're below the 200, we're in a long-term downtrend. If we're below the 50, we're in a short-term downtrend. Right now, we're below both of them. We're in a short-term and a long-term downtrend on the daily time frame. Now, as you can see here, we've finally almost broken through this level of support. So this level of support has been bouncing, or we've seen a lot of bouncing happening around this area. So I wouldn't just call it one level, it's more like a zone that we've seen. So typically, I would use this as a zone, right where that candlestick body opens on that daily time frame to here. So basically, if we cross below 591s, it's time to dump this thing very, very strongly. We'll see aggressive selling happening in this situation. So is it a healthy pullback that we're going to see? I think so. We haven't seen a healthy pullback in recent times. And typically, if you look at the time frames of everything, right? Let's look at the time frames of everything. If you just break down year over year what's happened during these zones, right? So right now we're in March, right? So let's look at March from another year, right? So I'll just go to here. So March 2024 until like April, right? You can see what happened in NQ from March to April. We dropped about 8% in 2024. Let me find it in 2025. March, right there. March to April 2025. So on this year in 2025, we dropped about 20%. So in 2024, we dropped 8%. In 2025, we dropped 20%. In 2023, we dropped again. Where are we at now? Right? Where are we at now? We're about to break a very, very key support level. What makes you think we may not drop another 8% from here? 8% will put us down to like the 550 marks. 550 marks is a very, very like key psychological level as well. I call it a quarter point. So if Qs can get down to 550s, that'd be a great place to start looking for buy positions. We also have levels of support down here, which is at like 540s or so. Now, do I think we can drop down here? We'll see, right? We just want to start understanding that we don't want to be buying. It's very hard to buy stuff here. As we pull down lower on a higher time frame, we might be able to see where we can see a swing low or swing high. The next point of breakout that we've seen is essentially right here. This was a breakout candle. So this is my swing low, my most recent swing low to my most recent swing high. So if I go back to the daily time frame, this fib that I just drew from, I guess I'll just draw it there. This golden pocket zone is where I'd like to be buying. Now, ideally, we have this level of this QP of 550, also aligning with my golden pocket. So this area right here is where I would like markets to come down to, and I would start loading the boat, essentially. That's kind of where I think a pullback could happen. If everything goes to what I just mentioned before on the key risks and everything on that side of things. So we want to short the market, make some money, use prop firms, accumulate capital, and then start deploying capital later on around this area. Barbara is asking, you spoke about portfolio management big picture, how a day trader should absorb this info. Yeah, so basically what I mentioned, as a day trader, you want to be like in this chop, you want to be scalping, right? You don't want to be trading heavy size. You want to basically be trading on the short side of things. You don't really want to be going long for majority of the time. You want to be trading short. You want to be making sure that you're not risking a lot of capital of your own capital, probably risking like prop firm capital if you wanted to accumulate a lot of payouts, a lot of capital in terms of either you're trading your own live account and you're accumulating and growing that slowly, then you're putting that day trading portfolio into a long-term portfolio, because large money, in my honest opinion, is made in the long-term portfolio, right? So if you want to make the millions and whatnot, you want to basically just allocate it to your long-term portfolio and just keep building that day in, day out, day in, day out. Over the years, you'll see that explode. But the day trading is not. It's there to take the high risk, but not to put it into a high risk long-term portfolio. It's put into a medium to low risk long-term portfolio. The day trading is when you can get aggressive with some things. You can get aggressive with the shorts until we get down here, especially if we break this. We might even gap down over this weekend, and then just like melt all the way through. As you can see on the NASDAQ, we have been in a crazy chop. If you look at the weekly time frame on this thing, and I just get rid of this, I'm not sure if you guys have ever seen this before, where you see like a doji, and a doji. 3 weeks of dojis, like just absolute shit action, if I'm being very honest. Like that's how bad this action has been these last 3 weeks, maybe 4 weeks as well. We haven't really moved anywhere in a long, long time. And if you look at the action in the weekly time frames on like in the past for the NASDAQ, there's been very few weeks where we've had that crazy like non-movement action, like up and down, up and down. Everything has been like big down, big up, up, up. Like here's some maybe uncertainty for 2 weeks there, but like we came back and we kind of like got out of the chop. Here as well, there was some chop, but like we kind of pushed in like forward. And this is all here, all this year from April 2025 till now. Like it's been pretty easy to trade. These last 4 weeks have been extremely hard to trade. And you've probably seen maybe even Kunal mentioning that it's not a time to be risk on. I mean, I know a lot of other traders that are not risk on. They're all risk off. I personally am risk off. Like it's just tough to trade this stuff. And you rather keep your capital for the rest of the year. You don't want to just force a trade when you don't need to force a trade. If that makes sense. So when it comes to your portfolio, it's basically trading it. As a day trader, you want to trade low size, accumulate wins, stack wins, and then roll those wins into a long-term portfolio as a day trader. Cool. Any other questions from anyone? And then I can just dive into the charts. If not, I'm just going to dive into charts here. Okay, cool. So let's just start off with the SPY. I'm going to add my favorite indicators, the 200 and the 50 WMAs, just to understand where we're at. Okay. So our next QP right now is at 650s. I definitely think SPY can dump straight down to 650, so 662 to 650s. That's in play. We're below the 50, we're below the 200s. We're definitely on the way down. So next target on SPYs is down to 650s. On the ES side of things, for those that trade futures, let's see here. Gotta adjust my 50, adjust my 200. And all these lines right here that you just see QPs, basically like where I trade on the smaller time frame. So like if I go to the hourly time frame, it makes things way clearer to see. So we trade from one QP to the next QP, as you can see here. Like on the hourly time frame, we traded up to it, we wicked it, dumped straight to this QP. That's where we see bounces happening. Like to a T, you can very much pinpoint entries and sniper entries at QP. So like if you want to get in short here, you could have shorted that at 25s, stopped it there, and then rode this thing down a couple hundred points. So next level on ES is probably 6600s. If not 6600s, which could come very quickly, we could drop straight down to 6500s. And along the way, we'll see some choppy action, or we will see some pullbacks and whatnot. But you want to basically see anytime we break a key level of a QP, you want to see a retest, and then you take that short on that retest. Can I explain what a QP is in 30 seconds? Yes. In the simplest of simple terms, it is a horizontal line on your chart placed at every quarter point. So a quarter, you guys have flipped a quarter, a coin. You know what a quarter is. It's 0.25. For ES, it's every 25 points, right? So every 25 points, it's just a horizontal line that is placed every 25 points. A major quarter point is just the highest whole number. So like 6,700, 6,800, 6,900, so on and so forth. It's every 100 points on ES. And then QPs are 25 points in between those. That's it in a dumb nutshell. In a more sophisticated nutshell, which there's a whole book on quarter point theory, which if you guys want, I can send out to you guys. It's the hardest book I have ever read because it's just so data dense that you might get lost in the sauce. But the dumbed down version is these are psychological levels that institutions trade at. And why do they trade at these levels? Because that's where they can get in their full size. They know retail traders are going to basically trade these psychological whole numbers and they're going to be placing orders at these psychological whole numbers. So if they want to add big size, they want to be adding these big sizes at these quarter points, at these key levels. So that's why I trade them. And that's kind of something I was taught when I was at Goldman. Is like these are the levels that institutions care about. They don't really care what any other level. They want to ride this thing from 67.25s all the way to 6600s. Whatever happens in between, they don't really give a shit about, in my honest opinion. They would just get in here, they would get in like 1,000 contracts short, and they would just run this thing all the way back down like 1,000 points. So they're playing the long term versus like us on the retail side, we're trying to play like the short term in between these levels. So that's what it is on ES. On NQ, it's basically every 250 points, as you can see on my chart. 250, 250, 250, 1,000, like 25,000, 26,000, 27,000, so on and so forth. On the Dow Jones, it's basically 47,000, 48,000, 49,000, 50,000, and then 250s in between. It's just horizontal lines on your chart. Cool. So I'm expecting both of these to drop lower, NQ and ES to drop lower. If we dive into like some of the stocks that we're looking into, so like for example, NVIDIA on the daily time frame, a lot of chop was happening around here because it was flirting with the 200 and the 50 WMA. Finally had a big breakdown day on Friday, which now indicates potentially a push down lower. So the next target on NVIDIA from these 180s is probably 175. That's also a QP. It's also acting as a weekly support. So on the weekly time frame, you can see how 175 is acting as a strong weekly support. That basically there was no candlestick close below 175 since November of 2025. Every single weekly candlestick on NVIDIA has closed above 175. 175 is also a QP. It's a quarter point, which will act as a level of magnetization for the bigger institutions. So I think we can drop down to 175s. Apple right now, we're at the 250 QP, 250 quarter point. The next quarter point is 225s. Go to the, we've technically broken this wedge pattern that we're forming. On the daily time frame, we're below the 200, we're below the 50. We're in the long-term downtrend. The weekly is looking bearish. I think if the way we're going at, the next target, of course, is these 243 levels, and below that, like we can definitely come back down much lower than this. So if I were to look at the fib and draw it from my most recent swing low to my most recent swing high, my most recent swing low is here, where this breakout happened. So I'm going to draw it from there. My most recent swing high is about there. So where I would look to buy Apple is roughly at this QP, 225s, inside of this golden pocket area. So this zone here is typically a nice area to start accumulating some Apple shares. I wouldn't accumulate anywhere around here. I think if it comes lower, it's going to basically just slam dunk and come all the way down to like the 230s, 225 area, and you want to accumulate shares here. Tesla again, if I go to the daily time frame, we've basically we had a trend line that we rejected multiple times. We're below the 50, below the 200. Draw a fib from my most recent swing low to my most recent swing high. The area where I'd like to accumulate Tesla shares is roughly between 377s to about 360s. I have not added Tesla to my position just yet, but I think this is a good area to start adding some Tesla shares. Amazon on the daily time frame, again, well below that level. The weekly is, this chart's a bit choppy. I don't like this chart, so I'll skip it. Yeah, it's a bit tough to read this one. Like, you have a level here at 200s. Of course, there's a QP there at 200. But again, it's a very choppy chart. Like, it'll spike and then just drop straight back down. So this is a tough chart to dissect. Over here, we have Broadcom AVGO. This is a very slept on stock. A lot of people have never heard of Broadcom, nor have they looked at Broadcom, and they don't know how much this thing actually impacts the overall index. And it impacts the overall index a lot, like an insane amount. It's a very slept on stock. I like highly recommend you guys watch it when you're trading the indexes, because it impacts it a lot. So this one, essentially on a weekly time frame, we've created this weekly support area roughly around the 307s. If we look at the fib retracement from the recent swing low to the recent swing high, we're sitting inside of that area where it looks like a long-term buy around this area, where it's falling. So it might be a good starting position to add to your portfolio. If we look at some of the forecasts of like their earnings, they've basically beat earnings every single quarter. The technicals are strong buy. Analysts are having a strong buy rating. The forecasts for the year are essentially at 630s. The current price at 322s. The medium forecast for the long term is 360s, 465, 630. So 43 analysts are trying to buy this thing. It's not a bad buy opportunity right now to start getting into. Everything else, like, there are buy opportunities, but you need to wait a little bit more for those. So Broadcom is there. Google overall is my favorite stock long term. I just like love Google's moat. I love the way they run their business. And I think it's a good long-term stock to kind of have in the portfolio. They are a slept on company, in my honest opinion. Meta, I'm trying to get long down here, 575s. That's the QP down here, 575s. We've been pushing down lower. I think Kunal was trying to short this thing on Friday, which was probably a great short. We just like kept dumping and we basically dumped on Thursday and then gapped down and dumped even further. So this thing has been on a dumping spree, which could continue. And if we do continue down to like the 575 area, that's where I'd look to start accumulating some shares on Meta, with roughly a 7.7% stop loss on it. So I don't mind losing 7% on that for a potential 39% gain. Netflix again. Netflix had great earnings. They pushed up higher. I have actually accumulated some shares, like when we dumped down here to the 78 level. So I'm not in heavy. I'm probably in like 20 shares or so. I should have got a little bit more, but I'm not in a lot of shares. I'd like it to come back down, pull back down a bit lower into this gap, fill this gap, and then we can add more shares to go along. But as of right now, not there. Microsoft looks very good, in my opinion, for a buy to start adding size to your position, or because if you add size right now, and you put your stop at this weekly low, which is at 344s, it's not a bad risk to reward. Like, it's a 10% risk for a potential 40% gain. Microsoft's business is also doing pretty decently. So I kind of like this one for a buyer as of right now. This one here, AMD, I love this one for puts and shorts. So if you guys want to be aware of this, like I already have a level marked out for puts. If we cross 188 and you want to short this thing, it's a massive gap down. Like you can short this thing and make a lot of money from here to here. There's a big gap down on AMD. The other one I like is Disney. I'm already in Disney shorts. For those of you in my group, if you are in my group, I don't know. There's a few that are in both Bulls and mine. You already know I'm in Disney shorts. And I think I mentioned it on the last Bulls one that I came on that I was in Disney shorts. This thing has a massive gap. The weekly time frame is bearish. There is a massive gap down. The monthly is bearish. So if we continue to fall down to the 92s, there's a lot of volume on the 100 contracts, on the 100 strike price contracts. So you can get intrinsic value contracts. They might be a bit more expensive, but you can basically make like, I think like 60 to 80% return on some fairly risk off contracts because you're intrinsically adding them at 100 strike price, and you're shorting this thing down to like the 93s or so. So you can probably make like 60 to 80% return with some high decent volume and exit liquidity on it. But hopefully, like that's kind of like my breakdown on some of this stuff. If you guys want me to break down some stocks, I can look at that as well. Let's see, day trading MU myself. Do you like it? Let's see, MU. I don't think I've traded MU before, but I will look into it. Yeah, I've never traded MU until like whilst it was down here, to be quite honest. But if we're looking at it on the daily time frame, right? So my key levels that I like to draw always are the 50 and the 200. As you can see here, the 50 and the 200 are well above it. So as of right now, this is the 50 and this is the 200 on it. So we're above the 200, which means we're in a long-term uptrend. We're above the 50, which means we're in a short-term uptrend. Since we're above both, we're in a long and short-term uptrend. So like this thing is straight bullish, straight bullish. If we draw a quick trend line here, we might see a breakout happening soon. I'll draw like some QPs as well, just to add to my chart. So we have a QP of 400s. So 400s as a QP or major quarter point, essentially. Then we have 425s, 425s as a QP, which is currently where we're at. And then the next QP above that is 450s. So if we drill down to like the hourly time frame or so, we are seeing a nice breakout happening. So essentially what I've seen over here on this chart is we saw a rejection happen and we saw a pullback back below the QP. Now we've closed above the QP on the hourly time frame, which is a good indicator of us to push higher. I would like to see us probably hit the 430s, retest this area of the QP of the 425s, and then go long. Like I would like to see this happen. Like a break to the 430s, see price react at this level. If we pull back and retest this area, we're retesting this trend line and we're retesting the QP, and we just go long off the QP at 425s, all the way up to the 450s. I think it's a very high probability trade if that does happen. I wouldn't go long just yet. I would wait for more confirmation and then go long on that. I'm looking at NAND. I don't know what NAND is. Let me see. I have zero clue what NAND is. NAND? Is it a stock? I don't see it here. I don't know. Once again, I'm a futures trader, so I primarily just trade futures and equities. If you guys, let me break this down as well. If you guys want to learn futures and get into futures, I'm having a bootcamp. I'll just quickly share a quick few minutes here. So let me do this. So I have a bootcamp starting tomorrow. So from March 15th to March 18th, like 8 p.m. to 9:30 p.m. EST. It's a 4-day bootcamp. We'll have 3 days of basically education, and then the fourth day is live trading. We'll live trade and we'll trade futures. So you also get a free trade makers account for this if you want to join this. This is like basically what I'll be covering. The price is only like $297 for all the days essentially. But it's only futures. We're only going to touch futures. We're only going to touch prop firms. We're only going to touch like using prop firm capital to get payouts, and then it additionally like then putting those prop firm payouts, like I mentioned, into long-term assets, like I was telling you to, like start buying AVGO, start buying Microsoft, so on and so forth. So I can drop this in the link here if you guys want to join. I'll just post it in here, but I'll continue breaking down some stocks and answering questions as well. I forgot to mention that. But NAND, I have zero clue what NAND is. MU, SNDK, those are names of NAND. Okay, so let me look at SNDK then. SNDK. The daily. Yeah, again, this is looking bullish. Wow, look at that weekly. Insane. So if we put like my quarter points in there, right? So like this is how I would trade it, how I would break down my charts. 650 is a QP. You can see how we pushed down, rejected that, and just dumped straight through it. Like the next one is 675s, essentially 625s is below that. And then the weekly is at 600s. And the major. So if I go to the daily time frame, okay, cool. So the next major is at 700 as well. So let me just mark that out just to be aware of it. Okay, cool. So on the hourly time frame, looks like we're on a rip higher. Ideally, we basically ripped through. If we go to the 15-minute, you'll probably see us. We basically pushed up above this QP, rejected at the QP, pulled back down. Accumulation happened at this QP again. You can see how we're just hovering around the QP exactly like at the level. And then as soon as we broke out, retested this exact level at the QP at 625s and then pushed up from QP to QP. And then what did we do again? We broke out above the QP, came back, retested the QP to a T, like to a T. Like we tested that 650 level and then rallied back up. So I would like to see us potentially, if we open up back at 675s, we could see a 675s and then potentially a short there, come back lower. Or if we come back down to 650s, we want to see this area at 650s hold for us to go back long to 675s. Because overall, the chart looks bullish on the hourly and daily time frame. So you want to be longing this long. You don't really want to be going short. The short that I mentioned at the 675s is like a short-term short. Like you get in like over here on a short, you run this thing down to like 660s or so, and that's a very small short that you're playing. But the overall thing is a long. And you can see very clearly on this 15-minute how it's respecting the QP. Like we break above, retest, go from QP to QP, break again, retest, QP to QP. And we just keep pushing. As you can see here, QP, break above, push to QP, accumulate over here. And like all accumulation happens at the quarter points, right? Like I mentioned that multiple times because the institutions are trying to add their positions over here. As you can see here, accumulation, nothing breaking, breakdown, back up, nothing breaking, and then all the way back down. So this probably looked very bullish at one point in time. It looked like it was able to break out. A lot of retail traders got into this trade. They got collapsed. Institutions got in at the QP and then slammed this thing right short. and then made all their money all the way down to like 560. So that's that there. Can I paste the link of the bootcamp? Yeah, I pasted the link of the bootcamp. If you guys, it's right there. Okay, I think I'm lost on some of these questions. Where am I at? Will you be sending another email with pricing for bootcamps? Yeah, well, it's right there. Thoughts on SAIA, then flip to financial thoughts on GS. SAIA. Interesting. What is this? Transportation trucking company. 14,000 employees. Operates regional, interregional trucking loads. Logistical services. As of right now, it's below the 50 and below the 200. It's looking bearish. If I go to the weekly and I look at the most recent swing low to swing high, which is this is the most recent swing low, the most recent swing high. It's in an area where you could be purchasing this for the long term. So this area here, this golden pocket area, is like an area for long-term purchasing. I would need to do a deeper dive into this stock to figure out like what the hell it is. I have never heard of it in my life until today. So I don't really know what they do or what they're, I mean, I know they're a trucking company, but like apart from that, like how else do they do stuff? And you can see like this is where the buying is starting to kick in already. So like we pushed straight down lower. The first sign of buying has appeared. We could see some consolidation and push down lower here. So if you wanted to get in long, you'd probably get in long around this area. Even if you were to risk it at the low, it'll be a 12% risk for potential 35% gains. It's a 1 to 3 risk reward ratio if you want to go long term for shares on this thing. So you could be accumulating this for the long term. Not a bad place to be. Looking at analyst ratings as well, just to look at analyst ratings. The forecast is basically some are selling it's a sell, some are looking for a buy, so it's a high risk type of buy. One or two are selling sells, like a lot of them are saying hold. No one is really saying, not many are saying strong buys. So like some are saying buy and whatnot. So again, it's like it's not a bad one to add to the portfolio. I wouldn't go heavy into your portfolio for it. Goldman Sachs. So the weekly on Goldman Sachs is basically thousands. We almost hit 1,000. If only I had my Goldman Sachs shares. Got rid of them. Got rid of them a long time ago. So let's see. 750 QP. Is right here. So we can see how it's rejected, pulled back, retested the QP, pushed down higher. That's a nice area there. So looking from our most recent swing low to our most recent swing high, essentially the move that started it was this green candle there. So we draw a fib. We're basically below that level. So I'm on the day, I'm on the weekly. So we've just basically went straight through it. It's looking very bearish right now. We go to the weekly or the monthly and check this thing out. Adding at the 750 is not bad. Like starting your position at the 750 is not a bad idea at the QP. But it's 3 weeks of red. I wouldn't touch it until it gets down to 750s. You mentioned the book about QP. Do you have the link for that? I don't have the link for that. But if you want to send me an email, I can get you that book. I'll just type my email in this chat. For anyone that wants a thing, just send me an email and I can get you the book. I feel like I need to watch it again. This is going to be saved for us to watch again. I think so. I think it's being recorded, so you guys be able to watch it again. Not sure. This should be recorded. Yeah. The class seems worth it just to be able to set up QPs on equities. We trade even not just futures. Seems so systematic when you put QPs on. Yeah, it's very systematic. It's very systematic. Even all the strategies I trade are like, if this happens, do this. If this happens, do this. If this happens, do this. Like it's very strategic. Like it's if you don't have that stuff, you can go into the market very emotionally driven, and then you can make some impulsive decisions. Don't forget, people, we're in a risk-off market. Don't rely on technicals. Do a deep dive work. Yes, Chris, I agree. Like, we're in a risk-off market. I mentioned it multiple times. You want to be trading, in my opinion, prop firms. You want to be making money on the prop firm side, not risking your own money, and then rolling that money when you get risk on, right? Like putting it into the market, risk on. Like that's when you deploy your own capital. Why risk your own money? You might as well get all the reps and all this stuff in, especially if you're a beginner trader, with prop firm capital, and then roll it all into live capital later on. Like, I guess if you want to roll it into live capital, I would not do so myself, but each their own, right? Hi, Mel. I'm sorry if you have to repeat it, but Bootcamp, I joined late. The link lands at payment, but no further details on timing. There should be the link should take you. I'll share my screen. The link should take you straight to this landing page. So if you click on the link, it'll take you to the 4-day bootcamp, March 15th to the 18th, 8 p.m. to 9 p.m. EST every single day, and then you have the live trading in the morning on the 19th, essentially. And then this is like what we'll be covering. This is the price of it. This is, if you click on this is where you can secure your seat. This is the stuff that you'll get. You'll get the 4-day bootcamp. You'll get the free account. You'll get all activations covered for. You'll get the blueprint strategy. Essentially trading with futures and trading with prop firms, right? So, and then the one that we're using is the trade makers. That's the prop firm that we're using. So that's when it is. It's tomorrow. So if you click on the link, it should take you here and should give you all the details for whatever you guys want to look into. Cool. What subscription level? I have like the most like premium level of trading view. I always buy like the subscription for TradingView like when they have Black Friday, so it's like 60% off or 80% off. So like I'm on like the premium one that's like $50 a month, but I paid like 80% off when they had like the Black Friday sale. So like you don't need the premium one, you can probably do with the plus version, but yeah. Hi Mehul, would recordings be available for bootcamp if not able to attend live? Yeah. So if you purchase the bootcamp, you'll get the recordings for it if you can't attend live. So you'll be able to watch the stuff whenever. I know like some people are not available, but like then yeah, you can just You can just watch it again later on. This is my email. I'll drop it again. And I'll just drop the bootcamp link again below if you guys want that. All right. Cool. If there's anything else that you guys need, let me know. If we're using TradingView, will there be a tutorial for help us set up the charts? Yeah. I actually have a free video on TradingView. So if you want to go to my YouTube, you can just watch it on YouTube. It's right there. There's a TradingView tutorial. I'll just drop it in the chat right now. There's a trade of 8 tutorial of like when you start trading futures, like how to set up your trade of 8. All of that stuff is like on the channel there. So I'll just drop the link real quick. And I'll be putting more content out on the YouTube, so you guys can check it out later on as well. Apologies, I'm kind of sick. Are you guys seeing the links that I'm posting, or you're not seeing them? Because some guys are saying I'm not seeing the link, and no links. What the hell? Hosts and panelists. Okay, so this is the YouTube link. This is the bootcamp link. I'm going to send it one more time. Let me know if you guys see it. And then I'm going to drop my email in there as well. Let me know if you see this now. Yes. It's my dumbass. My bad. Apologies, guys. But yeah, there you go. So the YouTube link is the trade of it tutorial. The bootcamp link is for the bootcamp, and then my email is there for if you guys want the what did I say? The quarter point theory book. Yeah. So just send me this deck as well. I made that deck that I showed you guys in the beginning of this thing. If you guys want the deck as well, just shoot me an email and I'll send you the deck as well. But okay, cool. There were some other questions above. So since we will get the free TM account during the bootcamp, perhaps we can get the subscription after the bootcamp. It's just experience on TM has not been very encouraging so far. The TM bootcamp, since we have get the free TM account on the bootcamp, subscription for TradingView, you don't need TradingView. If I'm being honest, you don't need TradingView. Like I just use TradingView to show you guys this stuff. But like I do some of my charting on like Thinkorswim, on TD Ameritrade Thinkorswim. Like it's just a charting platform. You don't have to use TradingView. You can use Black Arrow Trading from the trade makers. You can use TC2000. You can use whatever you guys want. It's just a trading like platform, like a analysis platform. What platform? What platforms can you use trade makers on? Ninja? No, you can use trade makers on Black Arrow. For futures trading, Rahul, you can use Tradeovate, Black Arrow, Ninja. There's lots of other platforms that you can use futures trading on. Cool. All right, guys, I'm gonna hop off here. Kunal, anything else if you're on?
I'm here. You're good.
Awesome. All right. Thanks, guys. I'll see you guys later.